Let me ask you this, and we'll get to the CPI in a second. And I just want to be straight. I want to get this in. Did the Fed make a mistake by taking 75 basis points off the table?
I don't think so, because I think they needed to move and show they were deliberate and to move further. The way that Jay Powell handled the press conference, I think, signaled they will continue. 50 basis points is a good step, but they have a ways to go.
Right, but why would you remove or at least give the feeling that you've taken it off the table? Doesn't that hurt the Fed's credibility, Richard, as some have suggested? Why not leave it open-ended? We're doing 50. We just did 50, and we're going to see what happens. Why put yourself in a corner?
Well, the Fed's credibility was damaged by the decision model they adopted, what I call the horses out of the barn model. That is, you wait to see whether inflation is there, and then you act. It takes 12 to 18 months for monetary policy to affect the real economy. And now they're behind the curve. So the point is they're moving in the right direction. They have a ways to go. 25 basis points to start, 50 next, probably 2 or 3 more 50s, maybe a 75. But they don't want to scare folks into thinking they've really lost control, which I think 75 basis points would have done, Scott.
Yeah, I mean, the market seems to be voting, if you will, that they have lost control, that the market's pushed Jay Powell over to ride shotgun because the market doesn't trust that they know what they're doing at this point.
Well, they'll have to regain that trust. And the best way to do it is to show that you're determined. You're not going to give in. You're going to act. And you're going to slay this dragon of inflation. Just remember that good old Yiddish expression, which is man plans and God laughs. Well, the Fed plans and God is laughing right now. And now they just need to come back, show determination, get it done. It'll take longer. Rates are going to go higher. And we've had a market, Scott, that for almost a generation here has seen nothing but low inflation, non-inflation, and free money. It's over. That's why we have this volatility. And there's a lot of people that have been engaged in this market that have never experienced anything else. They've been spoiled. So now they got to go ahead.
I'm sorry. No, you finish your thought, Richard. My apologies. And now they got to what?
Well, now they're going to have to actually do work. I mean, you got some great investors that come on here. Lee's one of the great investors. But there are a lot of people who literally going back almost 15 years in their 30s who have never experienced any real turbulence in the marketplace, have never seen real inflation, have never dealt with the problem that money that costs something is the way you discount the present value of future cash flows. So I do worry about that. And I think that's why we're having this enormous, you mentioned earlier, the VIX at 30 is still incredibly volatile. The fixed income markets have been quite volatile until the last week where they've settled in a little bit. No one's used to that.